Hey everyone, this is Ronak Ahuja. I welcome you all again. As we are nearing the end of the first quarter for the financial year 25-26, we are actually getting closer to the due dates of filing of the TDS returns for the first quarter. Now, the due date for filing of the TDS return for the first quarter of the financial year 25-26 is the 31st of July 2025. While filing the TDS returns accurately is very important, what's even more important is its calculation. In this video of today, we'll be discussing the calculation of TDS in respect of salaries that you pay to your employees. We'll be discussing the TDS calculation for the new tax regime as well as the old tax regime opted by the employees. So, do remember to stick around till the end of this video to get a hang of it. So, without wasting any further time, let's quickly begin. Now, before we begin, let me highlight one important point for you, and that is in case the employee does not submit any declaration highlighting its choice to opt for the old tax regime, then in such a case, the TDS for such employee would be calculated as per the new tax regime. This means the taxes will be calculated as per the old tax regime only if the employee specifically opts for that scheme. In case no declaration is submitted, the TDS will be calculated as per the new tax regime. Further, in case of a person who wants to pay taxes as per the advance tax provisions, then in such a case, the calculation that we are about to discuss can also be used for calculation of advance tax, which is due for payment on the 15th of June. With this, let's begin with the calculations. The changes to the income tax slab set forth by the Finance Act 2025 is as follows. Incomes up to rupees 4 lakhs, 0% tax. Incomes ranging from 4 lakhs to 8 lakhs, 5%. Ranging from 8 lakhs to 12 lakhs, 10%. Ranging from 12 to 16, 15%. 16 to 20, 20%. 20 to 24 lakhs, 25%. And above 24 lakhs, 30%. Please note, rebate under Section 87A will also be available under the new tax regime. Please note, the new tax regime is the default tax regime. If the assessee does not opt out of the new tax regime, he shall be automatically chosen for the new tax regime. Further, the new tax regime would be applicable to the individual irrespective of whether it being a resident or a non-resident. The rebate under Section 87A will also be available to the new tax regime. The limit has been increased by the Finance Act 2025 from Rs 25,000 to Rs 60,000. This rebate under Section 87A will not be available to an HUF or a non-resident individual. Although the new tax regime offers concessional rate of taxes, it comes with its own set of disadvantages. Let's have a look at those as well. The exemptions available under Section 10, including leave travel concession, house rent allowance, entertainment allowance, deductions for professional tax, interest on loan from housing property, or deductions under Chapter 6A. These all shall be withdrawn from the new tax regime. Chapter 6A deductions means the payments that we make for life insurance, Mediclaim, all sort of payments will also be disallowed under the new tax regime. Furthermore, losses from the house property will not be allowed to be set off from incomes from the other heads of income. No exemptions or deductions from the salary or allowances or perquisites will be available. The depreciation arising out of the above disallowances will also be not allowed. However, depreciation that is chargeable under Section 32 shall still be available, except for the items that is mentioned above. The standard deduction under Section 16 will also be available in the new tax regime. So these were some of the advantages and the disadvantages of the new tax regime. Now let's quickly try and understand these with the help of a few examples. However, before we move to the examples, let me quickly get back to the part I missed. The rebate under Section 87A would be available to the individual only if the net income of that individual does not exceed rupees 12 lakhs. This has been increased from rupees 7 lakhs to 12 lakhs this year. This has been brought in by the Finance Act 2025 and is one of the amendments. Now, moving ahead. So here are 4 cases with 4 different individuals. All the 4 individuals are less than 60 years of age. They have opted for the new tax regime and are residents of India. However, the net taxable income differs from one another. In case 1, the net taxable income is 11 lakh 50. In case 2, the net taxable income is 12 lakhs. Under case 3, it's 12 lakh 24,000. And in the 4th case, it's 16 lakh 85,000. First of all, we'll try and calculate the basic tax as per the new tax regime. Solution. So here's the snapshot of the new tax slab as per the new tax regime, along with the rates of tax. Say for example, if my total income as per case 1 is 11 lakh 50,000. On the first 4 lakhs, in the table aside, we can see there will be 0% tax up to 4 lakhs. So, on the first 4 lakhs of the total income, 0% tax will be charged. Next slab is 4 lakh to 8 lakh. On the next 4 lakhs, tax will be charged at the rate 5%. So, from income in between 4 lakhs to 8 lakhs, the tax rate would be 5%. Since the total income is less than 12 lakhs, that is 11 lakh 50,000, on the remaining 3 lakh 50,000, 10% would be chargeable. So this is how we calculate the basic tax. Now let's move to the individual cases. Case 1. The individual is less than 60 years of age. Total income is 11 lakh 50,000. Has opted for the new regime and is a resident. So, on the total income of 11 lakh 50,000, on the first 4 lakhs, 0% tax. On the next 4 lakhs, 5%. And since the total income is less than 12 lakhs, on the remaining 3 lakh 50,000, 10% of tax would be applicable. So, basic income tax on 11 lakh 50,000 would be 55,000. Now, the first thing we need to check is whether the individual is a resident individual or not. In this one, the individual is a resident individual. Thus, the rebate under section 87A would be available to such individual in this case. Also, the second thing we need to check is whether the total income is up to rupees 12 lakhs or not. Here, the total income is 11 lakh 50,000, which is less than 12 lakhs. Thus, the rebate under section 87A would be available. Since both these conditions are now satisfied, thus 87A rebate is granted to the individual. The rebate would be 100% of the tax calculated or 60,000, whichever is lower. So 100% of tax calculated is rupees 55,000 or 60,000, whichever is lower. In this case, rebate would be 55,000. So, income tax after rebate is nil, and thus no tax will be payable in this case. Now, since the tax liability here is nil, therefore no TDS would be required to be deducted from the employee's salary. Now, second case. In second case, the individual is less than 60 years, the income is 12 lakhs, and he's still a resident. So let's plot the entire taxable income, which is 12 lakhs. Now let's check the income tax slab. Up to rupees 4 lakhs, 0%. So on the first 4 lakhs, it would be 0%. From 4 to 8 lakhs, it would be 5%, which is okay. Since the total income is 12 lakhs, thus on the remaining 4 lakhs as well, at the rate 10%. Income tax on 12 lakhs would be 60,000. Now, for rebate, we need to check if the individual is a resident. Yes, he is. Is the income up to rupees 12 lakhs? Yes, it is. So, the individual would be granted rebate under section 87A, which would be lower of 100% of tax calculated or 60,000. In this case, 60,000. So, the tax payable after rebate is nil, and thus no tax will be payable in this case also. Now here again in the second case, there is no tax liability. This means no TDS would be required to be deducted. Moving ahead with the third case. In case 3, the individual is less than 60 years of age. Total income is 12,24,000, opted for new tax regime, and is a resident. So, we plot the entire total income. On the first 4 lakhs, 0%. From 4 to 8 lakhs, 5%. Then, from 8 to 12 lakhs, 10%. And since the total income is less than 16 lakhs, so on the remaining 24,000, at the rate 15%. So, basic income tax is 63,600. Now we check the rebate. Is the assessee a resident individual? Yes, it is. Is the total income less than rupees 12 lakhs? No. So, since one of the conditions is not satisfied here, hence rebate under section 87A will not be available. So, rebate under section 87A is nil. So, income tax after rebate is 63,600. Now, if you see something, you'll find something different here. Just because the assessee earned an additional 24,000, he's being asked to pay 63,600. Just for earning 24,000, he's being asked to pay 63,600 to the government as taxes. To remove this injustice, government introduced a relief provision to this section. Now, what's that relief? Say the assessee earns 12,24,000 during a financial year and is not allowed rebate under section 87A because of the maximum limit of 12 lakhs of the total income. In such a case, the assessee will be required to pay only to the extent of the additional income earned. In this case, the additional income earned is rupees 24,000. Thus, he'll be required to pay only up to the additional income earned and not the entire 63,600. This is the relief that has been provided by this section. Now let's quickly look at the steps to calculate the relief. Step 1. Check if the total income minus 12 lakhs is less than 63,600. That is the tax calculated above. So the first condition is the total income minus 12 lakh less than the tax calculated above? Step 2, if the answer to the above question is yes, in that case, relief is equal to tax calculated minus total income minus 12 lakhs. If not, then relief would be 0. In this case, since 12 lakh 24,000 minus 12 lakhs is 24,000, which is less than 63,600 here, the answer to the first step is yes. Since the answer to the first step is yes, we move to the second step. If yes, relief is equal to tax calculated minus the total income minus 12 lakhs. So 63,600 minus 12 lakh 24,000 minus 12 lakhs. So which comes to 63,600 minus 24,000. And the answer is 39,600. So relief as per 87A proviso would be 39,600. And the tax payable would be 24,000. Please note, on this tax, education cess will also be payable. Now in the third case, the tax liability is rupees 24,000. On this rupees 24,000, we'll be adding education cess, and then the total figure that we arrive at would be divided by 12 months. The final figure would be the tax that would be required to be deducted from the salary of the employee. Moving on to the fourth case. Here the income of the assessee is 16,85,000, less than 60 years of age, is also a resident individual. Let's quickly plot the total income. 16,85,000. On the first 4 lakhs, 0%. 4 to 8 lakhs, 5%. 8 to 12 lakhs, 10%. 12 to 16 lakhs, 15%. And since the total income is less than 20 lakhs, on the remaining 85,000, at the rate 20%. So basic income tax comes to 1,37,000. We need to check for rebate again. Since the total income is greater than 12, no rebate will be granted. Income tax after rebate 1,37,000. Now we check for the relief. Step 1, total income minus 12 lakh. Is it less than 1,37,000? No. In that case, we move to step 2. In case answer to step 1 is no, relief would be 0. Thus, relief as per 87A proviso would be nil. So tax payable in case of individual D would be 1,37,000. Here again, on this 1,37,000, we'll be adding education cess and then divided by 12 months. So this was calculation as per the new tax regime in case the employee does not have any other source of income but salaries. Now let's move on to the taxes as per the old tax regime. A word of caution here again. Taxes will be calculated under this regime, that is the old tax regime, only if a declaration to this effect has been shared by the employee to the employer. Otherwise, the taxes would be calculated as per the new tax regime only. If the assessee opts for the old tax regime, then in such a case, the rates in force for the calculation of TDS on salary and the advance tax during the financial year 25-26 would be as under. In case it's a resident individual with less than 60 years of age, or a non-resident individual, AOP or BOI, or an artificial juridical person, then in such a case, this would be the income tax slab. Up to rupees 2,50,000, 0%, 2,50,000 to 5 lakh, 5%, 5 lakh to 10 lakh, 12,500 plus 20% on the remaining. Above 10 lakhs, 1 lakh 12,500 plus 30%. In case the person is a resident individual, we this 3 lakhs 0%, 3 lakhs to 5 lakhs 5%, 5 lakhs to 10 lakhs 10,000 plus 20%, above 10, 1 lakh 10,000 plus 30%. In case the resident individual is more than 80 years, the income tax slab would be as such: 5 lakh 0%, 5 lakh to 10 lakh 20%, and above 10 lakhs 1 lakh plus 30%. The rebate in this case would be up to rupees 12,500. That too only if the total income of the assessee is 5 lakhs or less. Same thing, the rebate under section 87A would be available only to the resident individuals. So the taxes as per the old tax regime would be calculated in a manner similar to the new tax regime, with the only major difference being that in the old tax regime, the deductions with respect to Chapter 6A, that is for life insurance or for Mediclaim, will also be available. In addition to this, interest on house loan of property would also be allowed as deduction. Further, I would like to highlight one more point. In case the salary income exceeds rupees 50 lakhs, whether in the old tax regime or the new tax regime, surcharge would require to be additionally be payable. That is, if the income exceeds rupees 50 lakhs, surcharge will be required to be additionally paid. The applicable rates of surcharge has been discussed in a separate video. The link to which is shared in the comment section. So with this, we end our video here. Do remember to share us a feedback in the comment section or mail us at talklevies@gmail.com. Thank you and stay tuned for more videos.